In the UK, there's three main credit reference agencies: Experian, Equifax and TransUnion. These agencies collect data on your credit history and they use it to create your credit report, which is essentially a record of your borrowing and payment behaviour. It's important to keep checking your credit report regularly to ensure that all the information is accurate and up to date, because they can get it wrong sometimes. Traps. First up, not tracking your spending. This is a big one, folks. If you don't know where your money's going, how can you create a budget that accurately reflects your spending habits? So make sure you're keeping a close eye on your spending and don't just rely on your memory. Write it down. Keep a notebook. Add your spending into that. Next, underestimating your expenses. It's all too easy to forget about the monthly subscription that you signed up for, or to underestimate the cost of a big purchase. Make sure you're being honest with yourself about your spending and don't leave anything out. Another mistake to avoid is not adjusting your budget regularly. Life changes and so does our spending habits, so make sure that you're reviewing your budget at least once a month to see if there are any changes that you need to make. And speaking of changes, it's important to make saving a priority. I know, saving can be a bit of a bore, but trust me, you'll thank yourself for it in the long run. So make sure you're setting aside a portion of your income for savings each month. Last but not least, don't be too rigid with your budget. This is your roadmap to financial security. It's not a straitjacket, so don't be afraid to adjust your budget as needed.
Credit score magic, boost yours in 60 seconds. A good credit score is crucial for loans, credit cards, or renting a property. Key factors in calculating your score are payment history, credit utilization ratio, and length of credit history. In the UK, the main credit reference agencies are Experian, Equifax, and TransUnion. Request a free credit report from any of them. To improve your credit score, pay bills on time, keep credit utilization low, correct errors on your credit report, and be cautious about applying for new credit. Avoid common mistakes like late payments and maxing out credit cards. Unlock the secrets to mastering your credit score in our full-length video. It's a game changer you won't want to miss. Subscribe for more. Cryptocurrency secrets unveiled, the mystery behind blockchain technology. Let's unveil the mystery behind blockchain technology. Blockchain, the foundation of cryptocurrencies like Bitcoin, is a decentralized digital ledger that records transactions on numerous computers. Each block contains transaction data and is linked to the previous block, forming a chain. This makes the data secure and virtually tamper-proof. Blockchain's potential extends beyond finance, providing transparency, security, and efficiency to industries like supply chain, healthcare, and real estate. With blockchain, track products from origin to delivery and verify property ownership without intermediaries. And there you have it. Blockchain technology is revolutionizing our world beyond cryptocurrencies.
What's the difference between secured and unsecured loans? Secured loans are backed by collateral such as a house or a car, and the lender is able to repossess them if you fail to keep up with your payments on the loan. The advantages are lower interest rates, a higher borrowing amount, and perhaps a longer time to repay the loan. The disadvantages, of course, is that the lender can repossess your property or your car if you default. Unsecured loans don't require any collateral. They're based purely on your creditworthiness and your ability to repay the loan. Because of that, they tend to have higher interest rates, lower borrowing amount, and shorter repayment periods. When deciding between secured and unsecured loans, take into account your personal circumstances and your borrowing needs. Weigh up the pros and the cons. Secured loans might be cheaper, but they put your assets at risk. Unsecured loans are less risky for you, but they may cost you more in interest. Remember, both types of loans will affect your credit score, so borrow responsibly. So in under a minute, we've learned the difference between unsecured and secured loans. What's the difference between ISAs and regular savings accounts? An ISA is an individual savings account and it's tax efficient. Any gains, whether that be interest or capital gains, are given to you tax free, whereas in a regular savings account, that's not the case. There are various types of ISAs. You can get a cash ISA, stocks and shares ISA, Innovative Finance ISA. If you're using an ISA just for a savings account, shop around, because sometimes regular savings accounts can give you a better rate of interest at the moment. However, ISAs are really good if you're using stocks and shares ISAs, because any dividends that you receive are tax-free and any capital gains that you make can be tax-free. So that's the main difference. It's worth exploring to find out what's the best option for you. If you get any more questions relating to personal finance, just let me know and I'll answer your questions for you. And also subscribe for more. Another important concept in investing is diversification. This means spreading your investments across different types of assets, such as stocks, bonds, and other securities. Diversification can help you to reduce the overall risk by minimising the impact that any one of those investments might have on your portfolio. So think of it this way, it's like the old proverb, don't put all your eggs in one basket. If you put all your eggs in one basket and that basket falls, you'll lose everything. But if you spread all your eggs around multiple baskets, you're less likely to lose everything if one basket falls.
Donald Trump's best finance quotes. Last one is controversial. Quote 1. Money was never a big motivation for me, except as a way to keep score. The real excitement is playing the game. Quote 2. I try to learn from the past, but I plan for the future by focusing exclusively on the present. That's where the fun is. Quote 3. Money is not the only answer, but it makes a difference. Quote 4. The point is that you can't be too greedy. Quote 5. In real estate, you make 10% if you're a genius and 1% if you're lucky. Everything in life is luck. Do you believe it's just luck? Let me know. Subscribe for more.
I know this might feel a bit counterintuitive because you always want to buy low and sell high, but trying to predict the market is a losing game, really. What you should do instead is focus on building a diversified portfolio and holding on to your investments for the long term. That way then it doesn't matter if you've timed a small dip in the market. And if you're investing regularly in a stock every month or every few months, every year, the price that you pay will average itself out over that time, and hopefully over time things will grow, so you will be making a profit. So it's not really that important to try and time the market exactly to get it into a dip, although there is money to be made that way.
Elon Musk's 5 most inspiring quotes that will motivate you to take action. Quote 1. If you need inspiring words, don't do it. Quote 2. Starting and growing a business is as much about the innovation, drive, and determination of the people behind it as the product they sell. Quote 3. I always invest my own money in the companies that I create. I don't believe in the whole thing of just using other people's money. Quote 4. It's okay to have your eggs in one basket as long as you control what happens to that basket. Quote 5. When something is important enough, you do it even if the odds are not in your favor. What's your favorite quote by Elon Musk? Subscribe for more.
Let's face it, life is unpredictable. Emergencies can happen at any time, whether it's an unexpected job loss, a medical emergency, or a home repair. These unexpected expenses can quickly drain your savings and leave you in a financial crisis. That's where having an emergency fund comes in. An emergency fund is a dedicated savings account that you can use to cover unexpected expenses. Having an emergency fund gives you peace of mind, knowing that you're financially prepared to deal with any unexpected event.
Emergency fund in a flash. Here's how to build, maintain, and use an emergency fund wisely, all in under a minute. Save 3 to 6 months of living expenses. Budget, cut expenses, and explore income sources. Use high-yield savings accounts for faster growth. Automate savings and celebrate milestones. Only use your fund for true emergencies like job loss, unexpected bills, or urgent home repairs. Regularly review, set goals, and adjust based on life changes. Start saving for emergencies today, and enjoy the peace of mind that comes with financial stability. Check out my full-length video for a deep dive into mastering your emergency fund. Subscribe for more.
Your credit score is calculated based on a variety of factors, including your payment history, how much debt you have, the length of your credit history, types of credit used, and any recent credit inquiries. Payment history is the most important factor in determining your credit score, so it's important to make sure that you're paying your bills on time.